Hey, what's going on everyone? It's Griffin here. So lately we've spoken quite a bit on the channel actually about the impact of increased interest rates in order to try and counter the increased pressures of rampant inflation. In fact, at the time of recording this video, average inflation across both Canada as well as the United States is sitting in the waters of roughly 8%, which is really high. And so in order to try and combat this, baseline underlying interest rates have been increasing, now sitting at right around 2.5%. Now, of course, increased interest rates tend to put negative pressure on the value of the stock market as well as real estate, which is why we're seeing the real estate and equity markets correcting quite dramatically right now. And this is because higher rates impact the cost of borrowing on loans, but it also impacts treasury bill yields and the interest rates that we can expect on high interest savings accounts. Basically, higher interest rates are reflected, yes, over into rates on mortgages, as we've covered quite a bit in recent videos, but it's also typically reflected over into the interest rate that you're incurring on your high interest savings account, which over the past 2 years hasn't been anything to get all too excited about. In fact, for a while, I wanted to make a video titled along the lines of, is the high interest savings account debt? Because seriously, over the past 2 years, you were better off investing in chicken breast rather than just leaving your cash sitting in your bank account getting eroded away at inflation with such low rates. So as a follow-up to the now grossly outdated video that I made back in 2019 on this topic, today we'll be covering 3 current options for high interest savings accounts in Canada that won't beat inflation, mind you, but are better than nothing. And seriously, there are dozens of high interest savings accounts across Canada right now, many of which are increasing their interest rates. So these are really just 3 that I've cherry picked, but that doesn't mean that other options aren't still going to be viable for you. And I'll leave probably at the end of the video a list of a bunch of high interest savings accounts that could be of interest to you. And quickly here, for those of you wondering why we're speaking about high interest savings accounts when typically I'm talking about investing, I still believe that it's very, very important for your personal finances to keep a portion of all your liquidities in a high interest savings account, hopefully getting more than the 0.1% interest we've been seeing over the past 2 years, but really just for that emergency fund, right? Usually 3 to 6 months of expenses. I personally like to keep up to 12 months just due to my lifestyle and the fact that I make money on the internet making videos, which is extremely volatile. So yeah, it's really important though in the context of your personal finances to still keep a portion of your liquidities in a high interest savings account for that emergency fund. And as always, if you enjoyed today's video, make sure to drop an early like. It really helps the channel out, and I'll be leaving links to each one of the accounts covered in the video down below in the description for easy access. All right, starting off with the first option that isn't a bank, rather it's a fintech company. We've got Neo Financial, who offers a really interesting high cashback MasterCard that we've actually covered quite a few times on the channel previously, but less known is the fact that they also offer a very intriguing high interest savings account, which they call the Neo Money account, that currently offers a 2.25% interest rate. Now keep in mind that underlying baseline interest rates set by the Bank of Canada can change quite rapidly at their own discretion. Well, the same applies really to any of the accounts that we're going to be covering in today's video. So while Neo Money account currently offers a 2.25% interest rate, which is actually quite high for a non-promotional rate, well, this could increase or decrease quite rapidly, again at their own discretion. I just wanted to mention that so you're well aware before opening up any of the accounts that we're covering in today's video. And as with most high interest savings account, the Neo Money account calculates their interest on a daily basis and pays it out monthly, but keep in mind that the actual percentage rate, so that 2.25%, is an APY, meaning that is over a 12-month period. Here's a quick example. So essentially what this means is that if you held, say, $10,000 in this account, considering that the current rate stayed constant for another 12 months, right, there's no fluctuation, increases or decreases in that interest rate, this would mean a yield of $225 in interest over the course of a 12-month period, which is $18.75 per month. Now, the 2.25% interest rate isn't the highest that we'll be seeing in today's video, or the highest in Canada for that matter, but it is among the highest considering the fact that it's not an introductory or say a promotional rate, where the higher rate, say 4%, is very enticing. However, it's only going to be for a couple of months at a time and then drops back down to a lower rate. When it comes to the Neo Money account, that 2.25% rate that is currently in effect is the constant stable rate that you can expect from that account. So overall, the Neo Money account, great interest rate considering that it's a free account. There are no fees whatsoever. If you're interested in signing up for the Neo Money account, use the link down below in the description and you can get a free sign up bonus when you sign up and create an account with them. All right, moving into the second high interest savings account, we've got the Tangerine savings account, which truthfully wouldn't be on today's list in the video if it wasn't for their very high introductory rate that currently sits at 4% for new users over a 5-month period. Tangerine, by the way, used to be called ING back in the day with that lion logo, if anyone remembers. Anyways, useless fact, but they've been around for a long time and are now owned by Scotiabank, actually. I personally had an account with ING transferred over to Tangerine for over a decade. Now, for the Tangerine savings account specifically, the base interest rate is at 1%, which honestly is complete garbage. It really is. But Tangerine is known for their high introductory interest rates for new users, as well as periodic high interest rates for existing users. That's why I'm mentioning them today. Case in point, as we can see here, right now, new users get a 4% promotional rate for 153 days in their high interest savings account, which equates to 5 months. And you can also get up to $400 cash back with their Tangerine card. You don't need to get the card, by the way, but I just thought I'd mention this because this is a parallel bonus that they're offering. So what this means here, as a quick example, once again, on a $10,000 savings balance, a new user would get $166 in interest over those 5 promotional months. And hey, you might think that this is not worth it since it would drop back down to 1% after, but setting up accounts just really isn't that big of a deal and doesn't take that much time. And they often offer promotional rates for existing users as well. Like I mentioned earlier, like most recently, they sent me an email with a 3.5% promotional rate for 6 months. So I sent over like $40,000 to that account that I had in savings anyways as an emergency fund, and now that's like the easiest $700 ever. So if you're interested in checking out Tangerine savings account, once again, there's a link down below in the description. You can check them out. Now, also, if you're interested in learning more about investing in the stock market, personal finance, as well as other investing topics, make sure to check out the links down below to the free courses that I offer over on Skillshare and also the courses over on Udemy, where you can learn all about investing, personal finance, real estate investing, as well as dividend investing. All of those are courses that I offer off YouTube because really I just want to dive into as much depth as possible on each one of these topics to provide all of you with the most value that I can possibly give. So with that said, let's get into the third and last option for a high interest savings account in Canada. Finally, moving into the third and last high interest savings account for today's video. This one is quite a bit different than the two others and pretty much any other savings account that you can find for that matter, in that the interest that you're accumulating on your savings balances within this account actually ends up increasing over time the longer you maintain that balance and don't end up touching it. The account I'm speaking about here is the Scotiabank Momentum Plus savings account, and the reason it's called the Momentum savings account is due to that particularity where the longer you keep funds saved in that savings account, the more relative interest that you earn, thus gaining more momentum over time. So right now this account offers up to a 4.25% interest rate, which is by far the highest interest rate, at least at face value, but it does come with a bit of a catch. So as we can see right here on the savings account's webpage, the regular base interest rate is actually only 1.35% with a current bonus interest rate of 1.70%. So sort of the same deal as the Tangerine account where there's a base rate plus a promotional temporary rate. With the Momentum savings account though, this rate is valid until December 31st, 2022. So right off the bat, you're looking at 3.05% interest for the next 4 months at least. And then combined on top of that, we have the premium period interest. That's what Scotiabank calls it, which is that added interest rate if you maintain your balance without ending up withdrawing any of it. So in this case, we can see that a 90-day streak unlocks a 0.85% additional rate all the way up to 1.1% after a year. And I know this might be a little bit complicated to follow, so I'll give you an example once again of a $10,000 savings balance, what you could expect over the course of a 12-month period in interest if you put that money in the account today. So from today to November 25th-ish, you would be earning around 3.05% interest, so you'd earn roughly $76 in interest. Now from then on, for a month, you'd earn an additional 0.85%, meaning roughly $33 till the 1st of 2023, January 1st, at which point the promotional rate would drop off and you'd be earning 2.2% until the next premium tier ends up kicking in after 180 days, 270, and 360 days. So all in all, on a $10,000 savings balance that you would put in that account today, over 12 months, you would earn roughly $270. Keep in mind once again though that with all of these savings accounts, the baseline interest rates as well as the promotional rates, even more so than the baseline rates, can change at any moment. So just be sure that you're aware of this reality. Okay, by the way, 2 years ago, I also made this same type of video, right? As I mentioned at the beginning of today's video, the accounts we had covered in that one though were EQ Bank, which at the time had an interest rate of 2.3%. That is no longer the case. It's currently down to 1.65%, even though leading rates are much higher than that right now. You'd almost be better off buying pretty much any bank stock really at that point. In that video, we also covered Wealthsimple, which had a 2% interest rate at the time. Once again, right now it's sitting at 1.5%, which isn't really anything spectacular, honestly. And then finally, we also covered Tangerine, which is the only one that's actually gotten better over the past roughly 2 to 3 years since I made that video. Bottom line, the interest rates for high interest savings accounts have been, or at the very least should be, on the rise. So when it comes to your emergency fund, making sure that you're getting the best rate possible is definitely the way to go. Otherwise, you're just leaving money on the table for pretty much no reason. I personally have savings accounts with a couple of different institutions, but my go-to right now are really Neo Money as well as Tangerine, taking advantage of that temporary boosted promotional rate, but long-term really taking advantage of both of those accounts is the way to go for me personally. But before opening up any account, just make sure you're well aware of the different particularities and characteristics of the different accounts and banks that are offering them. As I also promised at the beginning of the video, I'll be leaving a list right here of a bunch of different high interest savings accounts currently available in Canada. Make sure to just pause where you see fit and check out those accounts. So that's really all I've got for you today. I really hope you enjoyed the video. If you did, make sure to drop a like, subscribe to the channel as well, right? We're talking a lot more about investing, personal finance, and also real estate investing specifically. That's something that really just in my own life and business, I'm doing way more of right now and plan on doing a lot more of. So if you're interested in that, make sure to follow along so that you can keep up to date with my portfolio, but also everything I'm doing, I'm sharing on here so that you can really just learn from my own experiences and avoid as many of the mistakes that I've personally done. Seriously. So I'd also encourage you to check out all of the courses I have down below in the description for personal finance, investing, soon to be real estate as well. Some are free, some are paid, but with all of them, there is maximum value. That's really my goal with these courses. Finally, you can also book a call with me if you have any questions, and that's about it. So if you enjoyed the video, again, drop a like, and I will see you in the next one. Thanks for watching.